So yeah, yesterday was one of those days, right? Where the market basically stands up, slaps you across the face, and says, "You thought you understood me, didn't you? You thought you knew who I was. Well, now, think again. I'm a mistress that can't be tamed. I'm a guy or a gal who you think you know, but my idiosyncrasies are completely out of the realm of understanding to you mere mortals." Because we had one of the biggest fake outs of the year. And I don't care what you say, it was a fake out. Nvidia earnings looks like a rocket, right? 62% year-on-year revenue growth on a base that's in the billions, like printing money. Tech was green, AI was green, crypto was green, everything was lining up like the perfect up-only moment. And I know everyone was like, yep, we're back. All of the AI overvaluation worries are all overblown. Nothing really matters anymore. Get back in. And then boom, bam, everything flipped hugely, instantly, without any warning. Bitcoin nuked straight to that infamous 87K level, and everybody and their dog has been like, worried that it's going to go to that level. Like all of the lines of resistance and support all line up to around there. But if you're new to this game, yesterday probably felt like absolute chaos for you. But if you're a trader, yesterday screamed one thing: this ain't normal. This is not natural. This isn't retail. This isn't sentiment driven. This is something else. Something or someone mysterious, some Machiavellian individual, some mysterious cryptic person in the background with big scale and big money pulled the plug. Today we're breaking down exactly what happened, why it happened, who's behind it, and why this could actually be the final shakeout before Bitcoin and crypto generally rips. So let's try and get into that and like, share, and subscribe, do all those good things. So what caused that fake out? Well, let's rewind to yesterday morning, which is probably a time that you guys all want to forget. I mean, I know I do. And the markets, they opened strong. Every sector was flashing green. It was classic risk on energy. Traders were like, yeah, we're going into this. Nvidia's king. AI is king. We're going to print good revenue growth. And then, out of nowhere, the rug. It moved, and the move was violent. It was fast. It was totally out of sync with all the fundamentals. AI chip growth up, revenue up, valuations up, forward inventory orders up, everything up. But here's the crazy part: the level that it dropped to yesterday, 87K, is the most overhyped level on all of crypto Twitter. Everyone is staring at it. Everyone is talking about it. Everyone was waiting for it. And when enough eyes stare at a certain level, price seems to magically gravitate towards it. Well, it's not really magic though, is it? It's like herd mentality, herd psychology. But as the traders say, levels matter because people think they bloody matter, right? And yesterday proved it. But the more important and pertinent question probably is who actually caused it or what caused it. Now, here's where things might become a bit conspiratorial and things might get a little bit wild. There's a man called Tom Lee. And if you don't know who Tom Lee is, you should get to know. Tom Lee was on the air yesterday and he basically said very loudly that this move isn't normal. This move isn't organic. This move isn't out of the realm of anomaly. He literally said verbatim, I think we know who this is. I think we all know who this is. But he's not going to go into names. He wouldn't name names. But why? Well, maybe libelous. Because saying that name out loud can get you sued into the stratosphere, right? Into outer orbit. But the dots just aren't there. The breadcrumbs are everywhere. And every trader with a half-working brain can work out the pieces. There's another guy, Mike Alford. He came out and he said even more aggressively, they are pulling all the stops to nuke Bitcoin lower. Perpetuals, futures, manipulation, the biggest scam I've seen in the market. So that's not random speculation. And he's a plugged in dude. So who is they? They always say they. Oh, they were the flows, they're there. They were doing this, they're on that side. Well, let's just say this. It's the biggest offshore exchange, the biggest liquidity provider, the biggest market maker, the ones with the highest, most leveraged products, the one that recently admitted they had to tap their insurance fund. I'm not going to say any more, but if you know, you know. IYKYK, I think that's the acronym. The one that recently admitted all of those things, right? You know who it is. I know who it is. Tom Lee knows who it is, but nobody wants to say that out loud on camera, right? So, like, I mean, all conspiracies aside, what actually happened? Let's break down that chain reaction of events, right? So, this mess didn't actually start yesterday. It started way back in what seems like an eternity ago on October the 10th. On that day, a stablecoin inside one specific exchange dropped from $1 to 65 cents inside their own internal order book. Not globally, not everywhere, just inside that particular exchange. This triggered something called ADL. And it's like automatic deleveraging, basically. A chain reaction margin call on millions and millions of accounts. I mean, like healthy accounts, profitable accounts, accounts that should not, by any means, unequivocally, or by any qualification, have been liquidated. But once that cascade started, it spread like absolute wildfire. Other exchanges that rely on this exchange's liquidity, they have to start auto hedging. They have to start selling, auto deleveraging. They have to stay within their risk parameters and their VAR models, right? It makes sense. We all have to do that to some extent. These guys just have to do it like on a fiduciary and a legalistic basis because they literally are the custodians of hundreds of thousands of accounts. This is why yesterday looks like a forced move, because in essence, it was a forced move. Market makers got smashed on October the 10th. And when a market maker takes a hit, you're going to get wider spreads, weaker liquidity, stuffed breakouts, instant sell wicks, heavy price action, forced selling, slow bleeding, because this is exactly what they have to do to protect their own integrity of their own system. Like, it's not them scamming the market. They are reacting like an individual trader would, but multiplied by like a million, because they've got accounts to worry about. They've got liquidity to provide. That's exactly what we've seen in the last 6 weeks, if you think about it. All of those things aforementioned. Another trader yesterday I read was saying this wasn't price discovery, this was price engineering. And I think that's like such a succinct and beautiful way to sum it up, because there are so many things that happen in the market behind the scenes, levels that are gravitated towards, because there are so many other underlying obligations out there and other narratives that we're just not aware of. We see price, bid ask spread, but there's whole other stories out there, option expiries, futures targets, VWAP buying, VWAP selling, like so many things that you just don't see, right? Yesterday finally looked like the end of the unwind, though, because back in 2022, when a market maker got hit the exact same way, the deleveraging cycle lasted 8 weeks, right? We are now 5-6 weeks into the current one. But what about yesterday? Yesterday has the makings and has all of the characteristics of the final flush energy, right? On the final flush characteristic. It had the last forced liquidation kind of vibe. And although that's not scientific, it kind of felt like it was the last selling vibe. This wasn't fear-based selling. This was structural selling. And that kind of happens at the end of a selling signal, right? But guess what? The fundamentals, they haven't changed. Not even one little bit. And even Coinbase executives are out now saying there is no fundamental reason for this crash. I mean, it is kind of they're talking their book, right? And it is kind of in their best interest to say it. But I'm inclined to say that they are bloody right. Think about it. Adoption, up. Institutional flow, up. ETFs, up. Hash rate, formidable. Global demand, irrepressible. The macro narrative has not shifted. Back in September, we were hitting all-time highs. Nothing has deteriorated since then. If you think about it in terms of price action, this is just healthy consolidation, is what is a cyclical long-term trend, which is up. The only thing that has even changed, one exchange blew a hole in their balance sheet, and the whole market has been paying the price ever since. So what do you, as a hodler or a trader or an enthusiast or a maximalist or there's someone who quite frankly is a bit too over leveraged and over their seas right now, broski, what do traders like us need to know? Well, when the fundamentals stay strong, but price drops, that's not something to be worried about. In my neck of the woods, that's called an opportunity. Yesterday wasn't the end of a bull market. It wasn't a trend reversal. It wasn't the cycle top. It was just pure and simple forced selling, specifically engineered selling. Exactly the kind of selling that gives long-term buyers their best entries, baby. And there's another saying in trading that I really love, right? The weak hands, they sell the bottoms, and the strong hands, we buy them. And yesterday, weak hands panicked, but strong hands accumulated. And that's why it's important to always keep some cash on the side, never to be over leveraged, never to be always buying tops, and always to have some dry powder in reserve for when the war comes to a block near you. So where does this leave us, guys? Well, we're closer to the end of the unwind than the beginning. Liquidity is returning and will return. Full selling inevitably will dry up, as it always does in a sell cycle or in a sell pattern. It always does. Market makers are going to repair their books, and then the pressure is going to lift. Bitcoin's not going to walk up. It's going to explode back up as everyone starts to FOMO back in, as people start to rebuild their positions, and as people start to realize, hey, this was not a structural thing. This was a one-time selling occurrence that occurred because of reasons behind the scenes. So stay smart, stay strong, stay disciplined, stay zoomed all the way out, because this was noise. It was not a signal. But that's for me for now. My name's Justin Bantam. This is the House to Trade. Ciao for now. I'll see you on the next one.